What is liquidity? Liquidity refers to how easily and rapidly an asset can be spent if so desired. It is a measure of the extent to which a person, organization, or entity has cash to meet short-term and immediate obligations. In accounting, liquidity is the ability of current assets to pay for current liabilities. The most liquid asset of all is cash, because it can be sold for goods and services straight away without any loss of value. If a company has a liquidity problem, it means it does not have quick access to cash to meet its short-term financial obligations. Short-term financial obligations include loan repayments, utility bills, and payroll. Illiquid companies have a higher risk of defaulting on their debts and eventually entering bankruptcy. When you are deciding on your business's investment plans, remember that cash is the only asset that pays the bills. In the world of markets, liquidity refers to a commodity or stock and the extent to which there are enough buyers and sellers to ensure that a few buy-sell orders will not affect prices very much. In other words, if people sell or buy shares on a certain day and their actions do not upset prices, that market is said to have high liquidity. With this meaning, we can also use the term liquidity for the real estate market. Some markets are just more liquid than others. When markets' liquidity is high, the most a buyer is willing to pay is relatively close to the minimum a seller is willing to accept. The difference between those two prices is known as the bid-ask spread. The bid-ask spread in a liquid market is smaller than in an illiquid one. In illiquid markets, investors can make big profits, but they are also exposed to greater risk. In markets with high liquidity, investments are safer, but there are fewer big profit opportunities for speculators. In the world of markets, Forex is the most liquid. Forex stands for the foreign exchange market. In this market, there is a very high volume of currency trading. There are usually very narrow bid-offer spreads for hard currencies such as US dollar yen, British pound US dollar, euro pound, euro dollar, and euro yen. Major investors like the Forex market because its high liquidity means that their actions have little effect on prices. Thank you for watching this brief video on liquidity.